Why don't you kick us off? Give us a little bit of an intro, a background. I know we know each other well, but I'm certain that everybody else does. But and also just all the cool things that you're working on.
Yeah, so I mean, I think the best way to kind of describe what my background is, I'm a lifelong payments banker. First, I suppose coming up on 31, 32 years. First 10 years at the FDIC. I was a compliance IT examiner there for pretty much all of that tenure. Then moved over on the banker side of things and just always in consumer payments. And it's if you think about kind of the timeline or sort of the South Dakota, Citibank comes in 1984, up sprouts this, monster payments organization. And then really kind of the interesting part is how it incubated everything from there. And so we always say like all roads lead back to Citibank. And so you can kind of trace the lineage of Citibank, up sprouts a bunch of sort of startup credit card issuers from execs at Citibank to try, and then from there up pops
Right.
prepaid, Meta, Bank Corp, everybody else. Now we've got, my last count, 6 different banks in various forms of payments that have kind of put their payments home base in Sioux Falls just to pull in that talent because just over the last now, I don't know, 40 years really, you've just seen this growing incubation take place. And so we're not a hotbed for much more than pheasant hunting and walleye fishing and payments, I think is kind of the way to look at
You're
it.
right. That's great you brought that up because I've had so many people over the years that are like, what's the deal with Sioux Falls, right? It's like all this payments, everything's here, and password everybody, and nobody can ever figure that out. And so that was a great little history lesson for everybody.
Yeah, there's a lawyer here that I know really well. And he was the lawyer for the South Dakota bankers when Citibank first reached out and said, "Hey, we're thinking about coming to South Dakota." It was between South Dakota and Missouri at the time. And he's got a great talk on kind of taking you through kind of all that took place. But I think the really interesting thing is kind of how it incubated everything after that.
Yeah,
Oh, yes.
it's really
Well,
cool,
I
man.
tell you what, man, if you take a history look at, you mentioned Meta's password now, and if you take a look at their financials, I mean, it's like you can see the day it happened, right? I mean, it's like a complete shift in their business model of how everything went, and their financials just went up from there. So,
Yeah, so I was at Meta from '07 to 13, I think, and ran consumer credit for them at that time. And that was right at the day. Like I remember the day when they were like, holy shit, Galileo is profitable, right? Can you think about that? Like that, those were the days back in
yeah,
there, you know? And so, yeah, it was really fun to kind of come through that period now and then kind of see where it is today.
It's gone by quick, but I want to ask you this, looking back at those times and thinking through this, and you probably feel like I do that the gosh, we have 50 names for now, the middleware, the connectors, the friggin' synapse, right? That side of the world was, I think, maybe not a lot of us, but some of us, and I know you're one, we all really saw that coming and we're going, no, right? And to watch that train wreck, I think really set back, I mean, a lot of things. Like we lost a lot of fintechs that were probably great companies, and those were probably great employees who didn't need to lose their job and their families, right? Also, a lot of folks that were doing good things, be that for consumers, for businesses, et cetera. So sort of that, competitive nature that is probably ultimately a damn good thing for everybody. Just that was a really painful time. But my message of right now is like Autobahn, green lights, all lanes open. I mean, things are getting ready to hum again, especially on the bank side. And the news cycle is silent. It's like everybody screamed fire and then
exactly.
shut up. And I kind of, I'm a little angry and, frustrated at that because I think a lot of bankers are still in kind of turtled, hunker down. BaaS and embedded is scary. Meanwhile, the badasses are running away from them, and it's going to be a tough gap to close.
Yeah,
What
I
do you
mean, I
think?
think I look back 22, 23, just a major course correction. Like anything that grows fast, you can always trace it back. There's a course correction in there somewhere. Doesn't mean it's dead, doesn't mean it's going away, but it's a recalibration. The market course corrects itself, for 100 years, right? And so, I think if we look at it in that light and say, look, we had a course correction. We learned from it. Certainly things we see from a regulatory standpoint are changing rapidly. We think that there's some good actors coming back, good players coming into the space. We think we've grown and learned from that period. And to your point, Tanner, I think it's an opportunity now for best-in-class providers and servicers to step out of the muck and the mud, come out, look up for air again, and say, look, now it is go time. I was speaking at FinTech Meetup last week, and I said, they always tell you when you invest in your 401k, don't try to guess the market. You're in this thing for the long haul, right? And I think the message now, I think most bankers, and to your point, probably a little timid because there's just so much going on. But, to me, it's like, don't try to guess the regulatory wins. Put your plant your or plant your rudder in the water and build it the right way, because things change, right? When I was at the FDIC, I went through, I think, 3 different presidential administrations. I'm not going to tell you which ones because it'll immediately date me. But the point is, they did this in their view of banking regulation, just like we're seeing now. My advice to everybody is, learn from the course correct years, build it the right way, and can withstand. And I think it's an absolute perfect time for players to come in and be very serious about this.
No doubt.
Yeah, I think we felt some from that, from the scrutiny. I think the early consent orders were a little fire and brimstone, and I think the latter ones were, I don't want to say overreach, but they were pretty light, and but they were also very prescriptive, right? I'm thinking about, not to pick on Patriot. I actually really like Patriot Bank, and I think doing a better job. But looking at those orders, it was like a roadmap. I mean, we have a framework. Things like, I think there were 7 bullet points in there that I looked at. One of them was sending somebody, almost like an audit function, right? Sending somebody on site, to the fintech or the program, and just things like that feels like they're looking at this the right way, and it's a license to play, and
I like that word.
Guys at Claros, the guys at Claros put out this awesome kind of grid of like actions here, what the general subject matter was here, crossing off all the boxes, and I see that thing everywhere now, because I think it's just such a great learning experience. But there's common themes, as you guys know. I mean, it's like third-party risk management, BSA, AML, board involvement. Man, you can 90% of all those are saying those 3 things pretty darn consistently.
Well, this is the thing that's so frustrating. And I like the word you used, Tanner, prescriptive. If you've got the patience to read some of this stuff and understand it, it is prescriptive. And so they're telling, we need guidelines. They're giving you guidelines. You just have to read them. Okay. So guidelines, checkbox, right? But the other thing that I think is really interesting, and I'm going to just be open, man. It pisses me off, frustrated beyond belief that we went through what we went through, of a time where let anybody do anything and then come in here and start chopping heads off. Likewise, some of this stuff, synapse and things like that, they weren't difficult. There were, several of us out there going, this is a disaster. It's waiting to happen. It's a time bomb is what it was. Okay. Now that backlash, and to Tanner's point, really pulls bankers up into a fear mode. And I don't know if I want to do that. We had 3 this morning, and it seems like every week I get on here and it's like, how many have we done today? Right? It's not like, okay, so to the bankers out here getting the wrong message that, boy, I don't know about BaaS and embedded. It's on fire. And we actually have, I wrote it down here. We have a capacity stress point right now that, let's say there's, out of the 150 banks playing in this space, you got maybe 20 or 30 that are, heavy duty. Whether they're clean or not is a different question. But that point is, everybody's going to the same players. There's more opportunities out there now, but there's way more fintechs, and they're coming in fast. And so the embedded side of this has just completely exploded. That genie's never going back in the bottle. It's an opportunity zone. And here's the message I want to really pound home. I don't want to hear any more whining about credit unions. I don't want to hear any more whining about big banks or this banks. We've got the opportunity we've been looking for. we know how to do this in a fully compliant way. There is no reason. There is no reason to not do this now and to get into that participation space. And it's custom built for bankers. It's literally the hole you've been waiting for. Join in here and make all the money you want to make.
And you all know better than anybody, like, absolutely, Dave. And you all know better than anybody the model that drew so much attention 3 years ago was just a flawed model, right? And I know you guys smelled it right away. And I think I did an article 6 months ago, and I said, I think there's three models. I said, I think we have this, probably this early stage model where I'd put the Metas and the Bank Corps and those guys that, did it their way, grew to tremendous scale, because that's the only way that model was really going to work. And I think that they've gotten out ahead, and that's a very formidable situation. I think the second rung of players that I always call kind of the BaaS 1.0 players, we just got into a structural problem, right? The right pressure points weren't there. The control by the bank, platforms disintermediating their banks, platforms that were never built for scale, but were built for speed instead. VC money flowing in so fast that, it was a race to put bad accounts on because it looked good on a PowerPoint so you can go raise your next round. All those things just sort of played against it. And that's why I think the course correct is like, okay, yeah, that didn't work very well. But now is an opportunity. And I think with the right structure, we call it BaaS 2.0. And I think it's recentering around the bank. I always joke, and someday we'll make a t-shirt, but BaaS without the bank is just an ass. And I think,
so good.
Yeah, I think in the end, it's got to recenter around the bank if you're a fintech that really wants to be there for the long haul, right? If your VC is behind you about the long haul and your board's behind you for the long haul, it's about structuring the right way. It might not be the most comfortable way for some of the fintechs out there, but if longevity is what you want, I don't know the different model, because I don't think the Meta/Pathward Bancorp model, I don't really think that's something that can be replicated. So it's the next rush of, or the next run of folks that are going to get in, it's going to have to change structurally.
Well, there was everybody looking for the easy button. That was a flawed thought in the first place, and so
I don't have to worry about compliance. Those guys have it.
Yeah, they told me they did.
Yeah,
I've kind of chastised people on the other side of the fence, on the fintech world, that stop being irresponsible. You need to come to a bank as close to fully compliant as possible. Be an adult in the room, and don't just come over here and say, yeah, we do that. And the other thing I think that we've seen that's changed a whole lot is the API structure, whether that be from middle, I don't want to even use the word middle players, but just the cores themselves offer different opportunities now through sidecars and things like that they didn't before. There's Layers, Infinite, and others that begin to start saying, okay, we can do different API structures. And on the
that wasn't there,
side,
to your point, Dave, that wasn't there 4 years ago.
Exactly. And so the fintech guys, they were clever. They came along and said, API, open an account, issue a card, fund a card. And so it was like common sense APIs, where the cores were still running off the APIs back when I did core conversion. So, it was like completely different mismatch that wasn't there. We've kind of overcome a lot of that.
I've been down to the roundup. Geez, I'm going to guess just about every year. Well, I remember one of the first years it was snowing. I thought it's never going to snow in Fredericksburg. But it snowed in Fredericksburg.
I like to froze my feathers off.
I do remember this year, it stuck with me. The last day, it was very interesting to listen to the bankers. You were very wise to put the representatives from the cores, in front of the group of bankers. And I'll be honest, the bankers were a little tough on the cores. Like, where were you 4 years ago, right? Mm-hmm. And I'm not laying blame anywhere, but to me, that was an aha moment. Like, yeah, that's interesting. In the absence of the players that you would have expect, up sprouts new players. And they're not always going to be the best actors in the world, but they were filling a void to some extent.
Exactly right.
I'm on this rant right now that you have to, and you guys aren't going to agree with me because I don't agree with myself, but I'm going to say this. You have to decide whether you're going to build your strategy and partner or buy your products and solutions, or if you are going to buy a strategy. Now, I think that should be a seriously easy decision to make, that you don't want to buy a strategy. But I think largely, I mean, I'd tell you this, guys, on the traditional side of community banking, let's just say retail, I would go buy the whatever from the whoever and check the box and go on. Who freaking cares? It is an impossible battleground and it is a losing proposition, largely because of the fintech side. And frankly, what I think are great opportunities there, if I want to sponsor the reseller, right, and get my customer, get the brand, the commercial customer, the fintech to resell my banking products. I handle the compliance. Cool. That's a great retail strategy coming at it from a business angle. But having a great strategy, building a great strategy at the bank, and then going out and finding the partners to either build it or who have the solution. And that typically cannot and should not be found through an RFP, and damn sure not a gap analysis. Oh my gosh. That world is really evolving and different to me right now. And I think that's what was missed back in the day, to your point, Trent, of a lot of bankers all buy their strategy from their core. And when there is no BaaS embedded strategy coming from the core, they're sitting there going, who are you? I feel both ways. It's funky. So it's a strange time.
And I think the only thing I would add to that is, I think you're absolutely right. I think there's two schools of thought that are starting to emerge now in this sort of 2.0 world. One of them is, okay, I can find my solutions from providers that are top of mind now, as opposed to what it was before. And you're right? There are some very interesting stuff coming out of the cores right now, stuff we're looking at very heavily. And then I think there's also banks, and we would definitely put ourselves in it, who are big enough to say, I can bring technology into this thing as well, and I can start to control my destiny a little bit more from a technology standpoint. And so, we launched our Cavenue platform last year, really about putting that API layer out there. So we're the hub and not merely the spoke. And I know that sounds like kind of cliche, but it's really important from my perspective. Doesn't mean it's the only way to do it, but to me, it was very important for us because that gives us the greatest visibility, the greatest transparency, the greatest opportunity to understand what's going on in a program. And I'm no longer looking out over the forest and telling my regulatory friends, hey, don't worry, I got my arms around this thing. Like, okay, let's be serious, right? Now I'm in the middle of it, right or wrong. It's a philosophy that, we're fortunate enough to have the skills and capability to do it. And that's our play in this thing.
This is perfect because what he's saying here is that their bank put together a layer that allows them to accept fintechs and augment payments and things to those players. Okay, so it's a feeder program for fintechs to go right into them.
You put yourself in the middle of
your bank, maybe that's not possible. Okay, and one of the things I get from bankers all the time is that, gosh, even when we want to set up something, I don't know which companies do what. And so part of this is like, okay, if fintech comes along and you partner with them on a level you do, are able to comprehend and work with, and then they want to add a feature or something, and it's like, can I help them with that? Or is that something they need to get from a third party? Do I work with that third party today? And how do I work with that third party? Okay. Knowing all the third parties sure as hell helps us. And being able to say what works with what and how this ought to work together, right? And every time it's like making a cocktail, right? It's like too much of that and it tastes weird, Okay. So you got to get the right blend of these things that work together well. And for your bank to build that and have that, let's just say, I don't like the word layer, but to have that infrastructure built in as part of the process allows you to just have people come in. That's an optimal way to do it. But to your point, not everybody can.
You're embedded in embedded.
But here's what's great, y'all.
Brilliant.
So this is super cool. I want you to everybody catch what we're saying here. Let me say this. There was somebody somewhere in some meeting, and I'll bet it was you, that said, we should build this. It would augment what we're trying to do, right? Okay, and somebody sat down and said, I don't know, man, budget-wise, XO, to the 4, I don't know, let me equals positive, right? All right. If they get to that moment to where we see this as such a play for the future of banking, that it's worth making that investment. That's what your bank actually went through, which is fantastic. Now, can you go back to that meeting and tell these other bankers whether you should do this or not is not even, that's kind of a dumb. I mean, that's a duh, right?
Yeah. I think even if you're a smaller organization that says, look, I may not have the right people at this point to get that involved in building technology, there are still good providers out there, right? There are good contractors who have done this in other places successfully. So I don't think you're on the outside looking in as much as it is, you better be talking to the Mayos and you better be involved in a lot of stuff and get to know this. You better get to know this ecosystem so you can separate. But I think in the end, whether you build it yourself, you have somebody built it, it's yours. It's got to be yours. And I always say, like, if I don't have the switch, not that I ever want to use the switch, but if I don't have the switch or I can't easily get to the switch, that's like red light number one. Like stuff's flowing through, stuff's going on, and I for some reason don't feel good and I want to throttle it back. If I can't get to the throttle, it doesn't mean I have to own it. It doesn't mean it's got to be in my data center, but boy, I better be able to get to it. And I think that's where it gets very, very hairy for a bank, that if they say, look, I don't know where the switch is, that's where I'd get uncomfortable.
Well, the other thing too, guys, with this is we don't talk about consumer. That's like the training wheels part, right? With your bicycle learning experiences. But eventually we got to talk business, right? Business is where everything is at and where everybody's going. Where embedded comes in is like, if you don't, I think that's what I think bankers are missing is if you don't. If you don't worry, Pathward will come take the damn business from you. So you kind of have to do this at some point to be a potential player in the future. You're going to need to embrace this. And what I see over time is they get involved in BaaS, then they understand embedded, they start working their own merchants on that side. And then we move to like a direct bank where it's like, we've kind of mastered this FinTech concept. We could launch our own brand and go out here and do it way more profitably and execute at a much higher level.
I have had, guys, and this is going to make your head spin. I've had multiple times, and this has been in the last 6 months, multiple times where, let's just call them a brand, comes to me looking for banking things and looking to embed things. Some they already have, some they need additional things. And they tell me the bank that they're using today and the bank that they're looking at using, both of which are like dear friends of mine. And I'm just like, oh, I wish I wasn't even here.
Right?
And I literally, the only thing I know to do after I got off, I called both of them and was just like, man, this is, I don't want to be in a bad spot. I'm just going to tell you guys that I got this phone call. I don't want any part of this. My point is, if you say, let's call it something like 800 or 900 commercial banks, this is the weaponry of the future. And you've got, what, 100 and, what is it, Dad? We're like just shy of 150, 148.
149, I think.
149 in BaaS now. Look at that as a percentage, right? I mean, that 20% is kicking the heck out of the other 80% in commercial banking. And this one's over, right? I mean, they're starting to steal each other's stuff like crazy. This is wrong.
Really want to get your thoughts on this, Trent. So me and Tanner have kind of seen this trend. We talk about it all the time. Just me and him. I don't know if we've ever talked about it on camera, but this idea, like I was working with a banker and we were dealing with a larger player, and I was explaining to them that on this particular deal, work your margins low, not high, because this guy can bring you big deals on the merchant side, right? I mean, so I don't want to name names because everybody will figure it out, but huge and lots of them. Okay. When he turns and says, which BaaS bank should I deliver this to? The one that makes him the most money. So sometimes early in the game, they're like, look how much money we can make. If you'll actually set yourself up as, depending on who your providers are and how your technology stack put together, these people could actually be a feeder system for you on large deals. And I think that is so missed by bankers, that because bankers haven't had an opportunity to work with a vendor that actually brought them leads.
Banks have only sold direct, not through partners.
And we said that too. If your only strategy is a retail strategy, and you're not thinking about a wholesale strategy where you basically say, look, I'm comfortable at not being my brand. I'm comfortable at not being my user experience, but the rails are still valuable. Deposit insurance is still valuable, right? Good ledgering is still valuable. And I'm going to find the way systems connect and let somebody else kind of drive branding and drive user experience. If you don't have a strategy around wholesale and you're still living with your branch network as driving all your business, that just feels really tenuous. I mean, we're a $5.5 million bank or $1 billion bank, multiple locations, owned by the same family for 114 years. But they're smart enough and they understand, like, we can't have a retail only strategy, right? The Dakotas are getting more, are it's very difficult to drive deposits from retail footprint in Minnesota, North Dakota, and South Dakota, right? We better have a wholesale play to supplement and think about and complement the retail strategy. And I always say, like, we're going to learn so much in partnering with this fintechs. It's going to benefit our retail business as well. We're going to see technology and we're going to be introduced to products and services that a customer in Fargo, North Dakota is going to find really valuable that they're not going to get from anywhere else, right? And why? Because we were seeing some of the really interesting stuff going on in fintech.
You bet.
Man, I'll tell you what, you got to be one of the smartest beggars alive that can see this stuff and can help explain this to other people so that they get it. We don't have to be You don't have to be the first astronaut, right? We learn from what everybody else does and can emulate that in a way that benefits us. But in the end, I think everybody has got to understand that, just say the digital lending world is walking off away from banking, and they don't really have much of a strategy there to be able to participate that, like, Cross River and Rocket Mortgage or things like that. Those are great opportunities, right? And we've got to be able to look at, the wholesale lending, debt facilitation, all of these things put together as opportunity zones for us to maintain a better spread than what we were doing in the past, doing it in-house. Likewise, the deposit strategy, I just pounded the table of people of just think of the concept of a negative cost of funds. In other words, somebody's paying you to bring deposits. Okay, these things are all reality. They're not astronomical. We'll put a man on Mars one day kind of thinking. This is actually doable now. And, man, I just, first off, let me say this. Hats off to you, man. You have been a pioneer of all of this stuff, and it's great to have people like you around.
It's fun to sit in on the ALCO meetings when I can tease the lenders. I'm like, look, I'm throwing cheap dollars at you. How come you guys, why don't we have more loans? Let's get some loans going here, guys. I'm giving you a big softball here. You better hit it. And so, but that's the ideas, right? That's where we're complementing each other, where a wholesale play changes your net interest margin and lets you get a lot more aggressive, but still be very, sound in your credit policy. But now all of a sudden you're beating your competitor by, a half a point or something like that. And that's how it all works together.
I love it.
I want to give you a minute for final thoughts, but a quickie before. What do you need help with? What are major strategic initiatives? I know you touched on some of that, but what are you working on, focused on, things like that anybody could participate with or play with or help you, or what are you after?
Yeah, I mean, I came to FIBT because they acquired a large ACH origination business about 6 years ago, rebranded it Kotapay. It's the payments division of the bank. We're doing payroll processing for 117,000 employers, right? And so we moved $103 billion last year, a little $5.5 billion bank in North Dakota. We looked at that and said, that's opportunity, man. If you can move money at scale compliantly on ACH rails, which is effectively a network, as we all know, like there's more networks, right? That there's more rails, there's more business use cases. So let's build on all of that, right? We're already PCI compliant. What a great jump start. And that's really what we're up to here. To me, one of the things we're working on right now is how do we build our own products to take back through that channel, right? So it's not entirely a third-party fintech play. And then how do we find fintech partners that can see long-term and say, look, as much as I wish I could pick the processor I want to go to, I know if I go over here to FIBT, it's their ledger, might be one of the core's ledgers, it's their APIs. They're going to let me still be a part of picking best-in-class providers inside of this ecosystem. But man, I'm going to be here for a long time. This bank isn't going anywhere. The family's been owned it for 114 years. It's not going anywhere. Man, this is where I think I want to build, because we all know that it's too often, especially like I said 4 years ago, it seemed like every 18 months these guys are frantically looking for a new bank because the foundation wasn't all that strong. And so, we're right now, we're assembling these best in class providers inside of this ecosystem, and then going out to what I think are the progressive minded companies, especially embedded finance, big brands that are thinking about embedded finance. I think that's one thing you're seeing now too, is the big brands are like, well, these fintech guys just got their heads beat in. Now this is my opportunity for embedded finance, right? And so I'm going to run on this. I'm a big brand. I don't want to be a bank. Payments are important, but that's not my core business. I'm out here selling widgets, but I need a payment solution. That's where the embedded stuff gets really interesting at that point. And so, yeah, it's just about coming in now and learning from the past. And to your point, it's foot on the gas time from my perspective.
Yeah,
Hey,
that
do you have
brand
family?
work.
Do you have family around Fredericksburg?
Yeah, I sure do. I love to tell the story. I get put to work every time I come down to the roundup. I will admit I miss a few sessions because my brother has a farm 9 miles outside of Fredericksburg on 1631. He's
Yeah.
got a brand new acreage out there. He didn't have a driveway. I remember I called him. He went to the post office to get an address. It didn't have an address, right? And up pops this awesome farm, and he's growing alfalfa, is going to do some grapes and all kinds of cool stuff, all family owned. And yeah, so I get to Fredericksburg a lot. And like I said, I seem to get put to work every time I get down there.
If he was on 1631, were they affected by the fire? I mean, affected is an understatement. I think we all
Yeah,
were.
man.
They get hit.
So last weekend, brother and his whole family is at a wedding in Wisconsin. I get a text. He goes, "There's a fire." And I said, "Okay." And he goes, "It's going straight for the farm." And so the only thing we could really monitor was listening to kind of some of the EMS and first responder scanner stuff online. And by the way, wow, what a job they did down there. That fire comes ripping through between 16 and 1631. I don't know, 8, 9 mile span, guys. You know better than anybody. Headed straight for his farm and stopped at the fence line. Um,
Whoa, that's
uh,
amazing.
Lost
Yeah,
pasture
we're
land.
talking for people that
Pasture
don't know
land.
what happened. I mean, there was probably a sustained 35 mile an hour, gust up to 50, 60, 70
The
miles an
windiest
hour.
day I remember of my whole
Oh,
life. And the
Coming
lowest
straight
peak
out of
was
the northwest, ripping through there, nothing stopping it. And yeah, so incredibly lucky. But he's out there helping neighbors, and that's what everybody does down there. That was really quick to see. The EMS is staging from his acreage. And yeah, not everybody was as fortunate, but man, shout out to those first responders, because we listened to them fight that thing all night long,
yeah.
saving buildings, saving houses, saving RVs, saving anything they could. Um, and yeah, sad story, but geez, what just listening to those guys, was incredible.
Yeah, one of my best friends works at the Bernie Fire Department, and he was keeping me apprised. And also, he's got his wife and new baby just right up the road here from us. And so I was like, hey, if things come this way, I'll get everybody out, right? And you make sure and worry about you. But also, as things are going on, kind of letting us know what they were looking for. And me and Dad, shoot, it was after midnight. I think that was Friday night, and had a conversation. They were looking for some heavy equipment, right? Bobcats, bulldozers, and I've got one, right? And luckily they found everything they needed, but we're ready to load up, And to your point, it's how this stuff goes. The last one in Amarillo, I loaded up a flatbed, left here at 3:30 in the morning and hauled like a dozen bales of hay and dumped off and got back here at midnight that night, And I mean, now all of those kind of folks are doing that for us here. So it is, you gotta love Texas. It's like community banking, man. Everybody takes care of each other
Yeah, it
through.
is. It was great to listen to. Neighbors helping neighbors, and that's what it's all about, right?
You bet. Hey, I can't thank you enough for everything that you do. Man, so much fun and support with all of us over the years, and obviously anything you ever need. But keep up the good work and let us know how to help, man.
I didn't know we were recording. I thought we were just shooting the bull.
Yeah, we're
That's
just shooting.
perfect. Perfect.
All right, man. We'll
Thanks,
see you
guys.
soon, buddy.
Good to see you.